Actually, because they were set over here, you may not have gotten it. So why don't we use this time, if you haven't gotten either Richard or Francisco's presentation.
Yeah, Susie has some there.
Susie's
Yeah, and
handing them
Jenny.
out. A picture's worth 1,000 words, so mine is the primary school colored one. I keep it simple for me. So if you want to pull that one out. And while she's handing those out, I'll just tell you a relevant story in that, and let me pull my mic up here closer for the tape. In Venezuela, as in many Latin countries, birthdays for little kids are a huge event, and they're a large celebration. So even one-year-olds have tremendous birthday parties among the middle and upper classes, where they spend a lot of money. They have bands, and it's quite a kick-up. So when you go to a party, so you go to a lot of parties, and you go with your kids, and you have a lot of a wonderful time, and that's where we have incorporated here piñatas as an idea. On the way, I usually pick up presents for the birthday boy. I have a 5-year-old son, and we were going to a birthday party last year, and we stopped at a toy store, and I went in to pick up a gift for their birthday boy, and being a good capitalist in the Bolivarian Venezuela, I decided on a Monopoly game. So I went to look in the board game section. I looked at the Monopoly games, and I was surprised that there were actually 2 Monopoly games at 2 different prices, and one was basically $10, and one was $20. But I looked at them. I thought maybe one's Atlantic City, one's London, or one's Mexico. What could be the difference? And I kept looking at them. They were both the same. They're both Atlantic City streets. I don't understand what's the difference between the $10 one and the $20 one. And so I asked the young man who was helping, the sales assistant, and I said, "What's the difference between the $20 one and the $10 one?" And he told me, well, in the $20 one, they use real Monopoly money, and in the $10 one, they use bolivars. So, the reason I say that is that if you look at the second chart here, you'll see where the bolivar is. Actually, if you turn it upside down, you'd get a better idea. But the bolivar right now is in the black market at 188. Actually, I've labeled it on here the Voldemort market because, like the Harry Potter character whose name must not be mentioned, it was illegal to do so in Venezuela. So the Voldemort market is at 188. And 2 important things about it. The official rate is at 6.3, mind you, and as Francisco was saying, there's quite a large disparity. But the important thing for what Richard was just talking about in terms of inflation is that the official rate of 64 inflation is not a real statistic. And the reason you can see that in the black market of the bolivar, that is literally gone from 90 to 180 in a space of 3 months. From September to December, it went in 3 months. It doubled, basically, or fell by half against the dollar in just a space of 3 months. Previously, the year previous to that, it took 11 months to do it. So that's the sign of a rapid growing of inflation, and that's what you can see in this chart. So the inflation rate is a tremendous, a great deal more than what the government official statistics would like to have you believe, at 64%. And actually, that still makes it the highest in the world, putting even Zimbabwe to shame. And just to put that in context, if you'll skip to the second page on the back, you actually see that that's not all of Chavez's fault. There have been periods of high inflation over the years. So it has happened in Venezuela before, and that is a great deal a result of heavy reluctance or heavy reliance on oil policy.
Excuse me, Russ, I don't have the chart here. What is the real rate of inflation now, according to your calculations?
It's close to 120%. It depends on when you stop the clock. Part of the problem with the 64 rate is what they do is there are price controls, one, that fix prices of certain items, and they use those to decide what the inflation is. So if the government hasn't marked up the price, then the inflation hasn't gone up, right? Even if there's none of those goods in the stores. So with the high level of scarcity we're seeing, the goods aren't in the stores, but no, inflation's just the same. It hasn't changed. And that's what the government basically said. Actually, there was a 6-month, 7-month hiatus between the latest numbers. They didn't report it. And matter of fact, they haven't reported the scarcity index. Once it got over 30%, they just thought better not to report that. And they haven't reported it basically since the first quarter of last year. So at the same time as you've got this huge inflation, you've got two things happening. You've got the money supply growth, basically the money supply. You can see the M2 charts and the M for 2008 to 2015, and the tenfold increase in money supply just in that 7-year period. But also you can see it in the 1-year period that basically it's almost doubling the money supply in 1 year. And that's because they're financing their internal debts and costs by just printing bolivars, hence the $10 monopoly game. At the same time, you've also got a falling reserves. Both Richard also has a chart showing it as well. But basically, from the high in 2008 of $42 billion in reserves, you're down to 21, 22 right now. And actually, well, Francisco's actually been to the vault of Venezuela and seen the gold, but I don't think he's actually counted it. But he has been to see the gold, and it does exist, right, Francisco?
Well, that's what it looks like.
I've always maintained that at some point you're going to get there and it's going to be painted bricks or something, the same way that they switched the painting at the Sophie Ember Museum. The falling reserves, though, are made up of predominantly of gold, and it's just bumped up $2 billion, and that's because of the sale of the Dominican Republic debt, which was actually $4 billion that they sold for $1.9 billion, and Dominican Republic did a $2.5 billion bond issue to the general public, to the world or whatever, and used that money to pay Venezuela. The $4 billion, they bought it for half price, or less than half price, actually. And what that really means is that a time when Dominican Republic bought that oil that was over $100 a barrel, Venezuela has now sold it to them at $25 a barrel. And that's basically when Venezuela, it's great that they've got the $2 billion, and at least they can't write that off at some point in the future if Dominican Republic will vote for them in the OAS or the UN or something like that and use it as a political tool. So it's great that you've got 25 cents on the dollar, but they only got 25 cents on the dollar. And Dominican Republic can borrow in the markets between 5 and 7%. Venezuela, on its PDVSA 17s, for example, is paying close to 45% in the market. And that's not a sustainable system. If you'll skip then to, let me explain where the problem is. If you'll skip to my chart number 14, I guess is probably the easiest to do. I have the latest statistics from OPEC. This is from the January OPEC statistics, and basically it's the top left corner. It says Venezuelan oil production according to OPEC. If you look at the bottom line, it's the third line from the bottom, Venezuela, because they're in alphabetical order. You'll see that Venezuela's monthly production of oil is 2.324 million barrels a day in December. And this is OPEC's statistics. It's been pretty consistent. You can see 2013 and 2014 they averaged basically 2.33 million barrels a day. That's not a lot. If you look above them, you'll see Saudi Arabia. Saudi Arabia is producing 9.5 million barrels a day. So Venezuela, with more oil than Saudi Arabia, is producing 2.3 million barrels a day. Saudi Arabia can produce 10. Actually, they can produce 13 if they turn up the spigots quite easily. And that's the crux of the problem. The next two charts, you'll see the Venezuelan oil prices. This, we don't have today's for this week's price. It comes out in another 2 hours. But I keep track of these things. But last week's price is $38.52. So Venezuela is currently getting less than $40 a barrel, although it probably will go up this week because there has been volatility in oil prices, but that will bring it up probably above, we estimate, between $40 and $41.
But its price per barrel in general is lower than the quoted price because it's heavy.
Yes. Well, for a while, Venezuela was able to command, typically, historically, it's been below West Texas Intermediate, WTI, which is the U.S. standard for oil. But from 2009 to 2000 till last year, it was actually trading closer to off of Brent prices. But now it's fallen back, so it's trading about $5 to $7, $5 to $7 right now below WTI. So if you take the WTI price, you can basically figure out what the Venezuelan price is. The next best thing to do is go to slide 17, and that's basically, let's put some numbers on why Venezuela is in this situation and why it's not as easy to get out of this situation for the country, which is not to say that it can't do it, but that the odds are higher than perhaps the government would like you to believe. Of that 2.3 million barrels a day that Venezuela produces, about 700 to 800, as Francisco Monaldi, Professor Monaldi pointed out, go towards domestic consumption, where gasoline is basically less than a penny a gallon using that black market rate of 188. Actually, I fill up my SUV for 25 cents, and that includes the tip. You're not allowed to fill up your own cars in Venezuela, and you're not allowed to fill up containers, both so you can't make Molotov cocktails and blow the heck out of people up, but also so that you can't fill up containers and sell it to the Colombians or the Brazilians for $4 a gallon when you bought it at a penny. At any rate, so because of the cheap gas and because of the fact that they imported, when they had a energy shortage, electricity crisis, what they did they wanted to solve it quickly, so they imported a bunch of power plants, diesel generated. As a matter of fact, Cuba even sold them some old World War II plants. Do you remember MASH 407, the Hawkeye and the Pierce and those guys? Venezuela now has some of those powering the electric grid. And the Cubans were more than happy to offload for significant sums of money these old diesel-generated plants. And as a result, Venezuela uses a lot more gasoline and diesel to fuel its electricity problems. After subtracting that domestic usage, you've got China, which is what we were talking about. China, you've got the U.S., which is the best customer of Venezuela, and I'll tell you why. When the U.S. takes 700 to 800,000 barrels a day, they have the Citgo refinery in the U.S. that takes half of that. So they have a captive client downstream, which is good for them, and why they shouldn't sell it. And what they've done now is they're actually in the market closing a deal today where they're trying to suck out $2.5 billion from Citgo before all the creditors like ConocoPhillips, ExxonMobil, who they owe $1.6 billion to, put lanes on Citgo and basically prevent them from selling it. They were trying to sell it for, originally they were trying to sell it for $15 billion. Our estimate is it's worth about $7 billion, $5 to $7 billion. It's got $2 billion in debt already. Today they're issuing another $2.5 billion, or they're trying it at 12% basically, which is, when you're borrowing at 12%, you're not considered a good credit risk, and that's with assets, secured by assets. So you've got the U.S. as their best client. Then you've got China, which is they're another great client for them, except that China is far away, so you have to discount the oil for the cost of the journey. And China has already paid, so but that makes them a great customer because they're paying you in advance. So Venezuela's shipping, well, they were when we had statistics under Rodríguez, they were shipping about 650,000 barrels a day to China, which is the first line you see in that chart on chart 17. And of that, though, 350 were going to pay back those loans that Francisco was just talking about, and meaning they were only getting paid for less than 300. In bottom line, what it means is that Venezuela is only realizing cash from about 1.2 million barrels a day. So even though they're producing 2.3, which is not a lot compared to Saudi Arabia, which is closer to 10, the majority of that is domestically used or given away to Petrocaribe, not anymore, but it was being given away to Petrocaribe or Cuba for 100,000 barrels a day, and then to pay back China, who's already paid them, which they sold to them at a discount, which we estimate about 2/3. At one point, there was a WikiLeaks cable that they had interviewed a PDVSA accountant, and basically PDVSA's internal audit found that they were selling, that when they worked it out, they were selling oil to the Chinese at $5 a barrel. Whether that's true or not is we don't know, but that's what the cable from the embassy to Washington said. And what that means is that you're selling, if we round it up to, I've got a chart, we've got 1.3 and 1.5 million barrels per day, and if you round it up using a $40 figure, there's a chart number 18, $40, 1.5 million barrels a day is less than $22 billion a year. That's 21.9 million, $21.9 billion to run a whole country. And as Dr. Rodríguez, Francisco Rodríguez said, that's the only game in town. As Francisco pointed out, Venezuela is one big oil well in terms of its money generating capability. It's just an oil well. And if that's all you can get for your main and 99% product, that's not enough to pay. For example, this month, Venezuela has to pay $750 million just servicing its debt. Just this month, $750 million, including Citgo and PDVSA and Venezuela. This year, they have to pay $11 billion. $11 billion out of a $22 billion pie, and that doesn't include paying Chevron, Eni, the Chinese, the Russians, who all are pumping the oil for you, much less your creditors, and why you can't get shampoo and Procter & Gamble, or the airlines, why you can't get an airline flight, because they haven't paid all these people, because there's not enough dollars. And that's the bottom line of what the problem is. $22 billion is not enough.
Thank you very much. Just one quick question. Where does drug money come into this?
Sadly, it doesn't go off to pay off the debt for bondholders. Although that's one of the reasons that Colombia probably was able to keep paying their debt during the Latin crisis of the 1980s. Yeah, I mean, drug money is just. I think that's where the real money in government is being made. If we are to believe the recent reports of the head of security for Chavez and Diosdado Cabello, who is the president of the National Assembly, who was with Chavez in the coup, is the major fee generator for government service.
Do we have any idea? Did he give any figure for how many billions of dollars?
No, notice the important thing is that Venezuela is actually a producer of the drugs. They're actually just a transshipment point.
Right.
So they're just actually taking their fees for the FARC or the ELN or whoever the drug lords are in Colombia to pass the drugs through, even Guyana or Suriname as well. But that's the economy there.
Okay. Thank you.